Hello aspirants and welcome again to Legacy IS Academy. Here we continue with our detailed analysis of the PYQs for Indian economy. Now today we will look at the questions that have been asked in the last 11 years from fiscal policy and government budgeting. Now this particular topic which is there, it is basically the static part of the budget. Now the budget is out every single year. The static concepts related to the budget, the fiscal policy, the types of budgeting processes, the different deficits, so on and so forth that are present in the budget, all this and much more is what is a part of it. So in the last 11 years or so, there have been about 20 questions that have been asked from this particular topic. That means almost every single year there will be around 2 questions that would be asked from this topic, making it quite important. So without further ado, let's get started with respect to the PYQs of this topic. So the very first question asked in 2015. Now here the question says, with reference to the 14th Finance Commission, which of the following statements is or are correct? Now we are presently in the 16th Finance Commission era. So 14th had just been announced, the recommendations, so they have asked in 2015 about that. Then 15th came and now the 16th Finance Commission recommendations are also out. So not just that we look at the PYQs, but you also need to understand what you have to study. So you need to now understand what are the recommendations of the 16th Finance Commission, what are the changes in the criteria that have been made, so on and so forth. So statement 1 says it is with respect to the 14th. Statement 1 says that it has increased the share of the states in the central divisible pool from 32% to 42%, and that is absolutely right. The share was increased from 32 to 42 by the 14th Finance Commission. After that, what happened, I'll tell you that as well. The 15th Finance Commission reduced it to 41 and the 16th Finance Commission has kept it unchanged to 41% itself. So yes, here by the 14th Finance Commission there was an increase. So statement 1 is correct. So this is gone and this is also gone. Yes, first statement is correct. Yes, so this is gone and this one will also be gone, because we know that first statement is correct. So it can either be A or C. However, in this 2 statement kind of questions, you have to know the other part as well. However, remember, if you are left with 2 options, you do not know which one is correct. You may not know the second statement. Still, probability wise speaking, you should still solve that question. Let us have a look at statement 2. It has made recommendations concerning sector-specific grants. No, absolutely not. The Finance Commission does not give you the sector-specific grants. The sector-specific grants are there in the budget. The government is the entity who does that. The Finance Commission does not go in such detail with respect to budgeting. It just gives you at the macroeconomic level the vertical devolution of the taxes, that is from the central government to the state government, and the horizontal devolution of the taxes. That means from that vertical devolution of percentage, how much should each state get. So statement 2 is incorrect when statement 1 is correct, 2 is incorrect. So the correct answer here will be A, that is 1 only. Let's move ahead to the next question. Now in 2016, I believe 3 to 4 questions were asked in this year, the year when I gave the examination. So let us have a look at this. Question says, there has been a persistent deficit budget year after year. Fair enough. Full stop. Which of the following actions can be taken by the government to reduce the deficit? When you are asking to reduce the deficit, basically either you are trying to lower the expenditure or increase the revenue. Let us see how this can be done. Statement 1, reducing the revenue expenditure. Yes, by reducing the revenue expenditure, you can bring down the fiscal deficit. Number 2, introducing new welfare schemes. Absolutely not. If you introduce new welfare schemes, you will have to spend more. So 1 is right, 2 is wrong. 1 is right. If 2 is wrong, this is gone. 2 is wrong, this is gone. 1 is right. So A and C, both options remain. Let us have a look at statement 3. Rationalizing subsidy. Yes, rationalizing subsidies means if you are giving too much of subsidy, you need to lower it. So rationalizing subsidies will also help over here. So the correct answer here should be A, 1 and 3. But let's look at the statement 4th as well. Expanding industries, no, absolutely not. It's not going to help. Option A, 1 and 3 are the correct answers here. Let's move ahead to the next question, again asked in 2016 itself. The question says, which of the following are included in the capital budget of the government of India? Now, what is this capital budget? So basically, when you have the budget can be divided into capital and revenue. In the revenue side, you will have the revenue receipt and the revenue expenditure. In the capital side, you will have the capital receipt and the capital expenditure. In capital receipt, there would be debt creating capital receipt and non-debt creating capital receipt. This is the bifurcation of your entire budget, right? And then various components will come under different places over here. So which of the following are included in the capital budget? So what all is included in this side is basically asked. Number 1, expenditure on the acquisition of assets like roads, buildings, machinery. Yes, this is a capital expenditure. So capital expenditure is on this side. Now question is, what is capital expenditure? Any expenditure which either lowers the liability or increases the asset is a capital expenditure. So when you spend money to acquire assets, it increases your asset. It's a capital expenditure. So statement 1 is correct. Number 2, loans received from foreign governments. This is a capital receipt. This is a capital receipt. Any receipt of money which either lowers your asset or increases your liability, it's a capital receipt. So here it's a capital receipt. So it is also a part of the capital budget. Third, loans and advances granted to the states and union territories. Now the loans and advances that is granted to the states and union territories. Now what about this? When you are granting the loans and advances to, let's say, the state government, are the state government going to use it completely for its revenue expenditure or capital expenditure? Will it make a difference? Absolutely not. It will not make a difference as such, because this is not a grant you are talking about. Do not get confused with respect to the grants. When the government of India gives grants, part of it can be spent on capital, on revenue. That's a different thing altogether. Here, the government is giving out as loans. So when you are giving it out as loan, then what happens? Now, loans and advances granted to the states and union territories. So now when you are giving loans, here, assume that the government is acting as a bank. When the bank gives out loans, that loan acts as an asset for the bank. For the receiver, it will be a liability, but for the giver, it will be an asset. So here, loan amount will include principal amount, as a result of which this will also be a part of a capital expenditure. Hence, all 1, 2 and 3 are part of capital expenditure. So the correct answer here would be D, that is 1, 2 and 3. Next question, again asked in 2016 itself. The question says, with reference to the Financial Stability and Development Council, consider the following statements. It is an organ of Niti Aayog. That is absolutely incorrect. It's not an organ of the Niti Aayog. When I solved this, this was in the current affairs in the month of July, and the paper in 2016 was in the month of August, 7th of August. This was in the first half of the July or end of June is when it had come. I remember reading it but could not have multiple revisions, but I realized that when I read this particular Financial Stability Development Council, I never came across the term Niti Aayog in relation to it. So it was easy for me to guess that Niti Aayog, it is not an organization of Niti Aayog. So this directly eliminates 2 options for you. That means statement 3 has to be correct. What is that? It monitors macro-prudential supervision of the economy. Yes, it does. Statement 3 is correct, but everything depends on statement 2. Now it is headed by the Union Finance Minister. Yes, actually it is headed by the Union Finance Minister. It is difficult to guess, either you know it or you don't know it, but if you just able to eliminate this, just even if you ever would have come across this particular organization, you should be left with two options and then you should be solving it. But yes, this is actually a factual question. Statement 2 is also correct. The correct answer here is C, that is 2 and 3. Moving ahead, again, question asked in 2016 itself. The question states that the term base erosion and profit shifting, BEPS, this is a term related to the OECD, that is Organization of Economic Cooperation and Development. The term base erosion and profit shifting is sometimes seen in the news in the context of A, mining operation by multinational companies. It's not related to mining, it is related to trying to evade taxes. B, curbing of the tax evasion by multinational companies. Yes, that is definitely the possibility. Is there a better option than this? Probably not. This should be the right answer. Exploitation of genetic resources, no, it has nothing to do with mining, it has nothing to do with genetic resources. Lack of consideration of it has nothing to do with environment. So they don't even want you to know exactly what it is. All they want you to know that you should simply understand it is to avoid the tax evasion. If you simply know that, you can answer it. B, curbing of the tax evasion by multinational companies. Let's move ahead. 2017. What is the purpose or purposes of the government's sovereign gold bond scheme and the gold monetization scheme? Now, ironically or maybe weirdly, both the schemes have been taken back by the government. The gold monetization scheme was taken back way back. Now, very recently, sovereign gold bond scheme has also been taken back by the government. So what are the purposes is what they are asking. To bring the idle gold lying with Indian households into the economy? Yes, this was the motive of gold monetization scheme. Number 2, to promote FDI in the gold and jewelry sector. That is incorrect. First is correct, second is incorrect. So 2 options remain. Statement 3, to reduce India's dependence on gold imports. Yes. Instead of investing in the physical gold, you should rather be investing in the sovereign gold bond, which will not require the government to buy the physical gold. That was the idea. The gold bonds return would be linked to the rate or the fluctuation of the gold prices, wherein no physical gold as such would be involved, as a result of which it will reduce India's dependency on the imports. So statement 1 and 3 are correct. Hence the correct answer here is C, that is 1 and 3. Let's move ahead. Again, another question in 2017 itself. The question says, what is the most likely the advantages of implementing goods and services tax? Now, GST was implemented from the year 2017 itself, and the very same year you get a question, right? Statement 1, it will replace multiple taxes collected by multiple authorities and will thus create a single market in India. Now, this GST came up with the concept of what? One nation, one tax. Now, one nation, one tax, many people thought it is related to one nation having only one percentage of tax. That's not the case. The one nation, one tax concept means throughout India, if a particular commodity is taxed at X% in the state of Karnataka, it would be taxed at X% only in the state of Maharashtra or any other state for that matter. That is the concept of one nation, one tax. So it would actually replace a lot of indirect taxes which was present, which was imposed by a lot of authorities, be it the octroi or any other tax like that. So it will replace multiple taxes collected by multiple authorities. That is correct. It will drastically, drastically word is, whenever it comes, be aware, generally these statements are incorrect. It will drastically reduce the current account deficit of India and will enable it to increase its foreign exchange reserves. No, that is not the case. 2 is incorrect. So this is incorrect. This is incorrect. Statement 3, it will enormously increase the growth and size of economy of India and will enable it to overtake China in the near future. No, absolutely not. It can facilitate the demand and stuff and facilitate the economy, but drastically in the enormously in the near future. Again, an extreme statement, incorrect. So the correct answer here is A, that is 1 only. Let's move ahead. Another question in 2017. Consider the following statements. Statement 1, tax revenue as a percentage of GDP of India has steadily increased in the last decade. Now here, Tax revenue as a percentage of GDP has steadily increased. So they are saying if tax to GDP ratio was 11%, next time it has to be more than 11, then next time it has to be more than this, then more than this, so on and so forth for the entire decade. No, that's difficult. The total tax revenue collection would have increased, but tax collection as a percentage of GDP keep on increasing. It's a very difficult task. So even if you don't know exactly, it is incorrect. Whenever they are talking about percentages, rate of growth, etc., it's very difficult to sustain a consistent growth, increase in the growth rate itself year on year, as a result of which this is incorrect. Statement 2, fiscal deficit again as a percentage of GDP of India has steadily increased in the last decade. Again, incorrect. Both the statements are incorrect. The correct answer here is D, neither 1 nor 2. Another question. In 17, with reference to India's decision to levy an equalization tax of 6%. This is also, remember, this is also known as the GAFA tax. What is this GAFA? Google, Apple, Facebook, Amazon. The GAFA tax, or the equalization levy on online advertisement services offered by non-resident entities. Which of the following statements are correct? Now, non-resident means the entities which are basically earning this money but not having establishments in India. Statement 1, it is introduced as a part of the Income Tax Act. No, it was not introduced as a part of the Income Tax Act. It is not with respect to the individual's income. Of course, non-resident entities that offer advertisement services in India can claim a tax credit in their home country. No, no such tax credit. This 6% is over and above whatever they would be required to pay in their own country. This is factual. It was brought in the year 2016 itself, and in 17 you got the question on that. The correct answer here is D, that is neither 1 nor 2. Next question asked in 2018. Now this 2018 question is actually quite factual. Either you know this or you don't know this. Difficult to guess. Let us have a look. The Fiscal Responsibility and the Budget Management Act, that is FRBM, Review Committee report has recommended a debt to GDP ratio of 60% for the general combined government by 2023, comprising 40% for the central government and 20% for the state government. This statement is actually correct. Statement 2. The central government has domestic liabilities of 21% of the GDP and as compared to that of 49% of GDP of the state governments. Now, this particular thing is actually incorrect. The central government has domestic liabilities of 21% of GDP is what they are saying, but this number is actually slightly different. Not slightly, in fact a lot different, because for the central government it is beyond 40% as such. Okay, central government has domestic liabilities of beyond 40%, so the statement is actually incorrect. So you have 1 correct and 2 incorrect. So 2 is incorrect, this is gone, 1 is correct. Now it depends on the third statement. Third statement says that as per the Constitution of India, it is mandatory for a state to take the central government's consent for raising loan if the former owes any outstanding liabilities to the latter. That is right. If the state government is owing some liabilities, there are certain liabilities on the state government towards the central government, then the state government needs to take permission from the central government before going for further borrowing. So statement 3 is correct. Hence the correct answer here is C, that is 1 and 3. Let's move ahead. Again in 2018, again a very or extremely factual question. Remember, GST had come, so 2017 they asked, in 2018 they asked question related to the percentage of tax rate on different things. Not exactly the percentage, but they asked which of them I think are exempt. Yes, consider the following items. They have asked which of the above items are exempted under GST, that is goods and services tax. So they want to know which items are exempt. So cereals and grains hulled are exempted. Then you have newspapers containing advertisement material. So now newspaper containing advertisement material, it's not the advertisement here, it is basically the newspaper which is exempted. Then you have so 1 and 4 are definitely exempted. So this option is gone. This option is gone. You are left with C and D. That means 2 will definitely be exempted. Now it depends upon third statement. Fish processed and canned. Now this fish which is processed and canned is not in the agriculture or the primary sector, it comes from the industrial sector. This as such is not exempted. So 3 is not exempted. The correct answer becomes C, that is 1, 2 and 4. Let's move ahead to 2019. Now this question says, consider the following statements. 1. Most of India's external debt is owed by governmental entities. See, when they are saying most, they are trying to mean more than 50%. However, that is not the case. So first statement becomes incorrect. Second statement, all of India's external debt is denominated in US dollars. Absolutely, of course, not all. Majority of it, yes. All of it, no. That's an extreme statement. So this is also incorrect. So the correct answer would be D, neither 1 nor 2. Let's move ahead to the next question asked in 2020. Now, in the context of the Indian economy, non-financial debt includes which of the following? Now, this is a tricky question. Tricky in the sense that it feels like probably nothing is non-financial over here, right? But non-financial here means what? The debt that is not raised in the financial market as such, right? Or you can say the debt that is raised by the government and the household as well as the businesses that are not included in the financial sector, not included in the financial sector. So can they raise debts which are not included in the financial sector or the financial market as such? Yes, they can. So housing loans owed by the household, yes. Amounts outstanding on the credit cards, yes. Treasury bills, yes. In fact, all of the 3 of them are the non-financial debts. Okay. Next, let's move on. The year 2021. Which one of the following is likely to be the most inflationary in its effect? Option A, repayment of the public debt. Option B, borrowing from the public to finance a budget deficit. Option C, borrowing from the banks to finance a budget deficit. Now, it looks all confusing, but the last option clarifies every single thing. Why? Because the last option is the most inflationary option there ever can be. That is creation of new money to finance the budget deficit. Whenever you print the money, it is the most inflationary in nature. There is nothing more inflationary than printing the money, no matter for what you are printing. Of course, you are printing it to keep it aside. It will not come in the market. For everything else, of course, printing the money is the most inflationary. With reference to the Indian economy, consider the following statements. A share of the household financial savings goes towards the government borrowings. Yes, it does. Right, it does. Government borrows through the treasury bill, etc. You might have it invested over there. Possible. Statement 2. Dated securities issued at market-related rates in auctions form a large component of internal debt. Yes, a large. Most, how large is not asked. Generally large. Yes, it does form a large component. So both statement here is correct. Whenever there are words like which are generic, which does not create any objectivity. See, when I say most, it definitely means more than 50%. When I say large, it's not that objective. 40% of a particular thing is also large. 60% is also large. 40% of a thing wherein multiple factors are there. Others have 10, 15, 5%. So I having 40% is still large over there. So any kind of such generic words are generally right, but you don't have to blindly do that. When you're left with 2 options, then and only then use these kind of techniques. Let's move ahead. Again, another question in 2022. With reference to the expenditure made by an organization or a company, which of the following statements is or are correct? First, acquiring new technology is capital expenditure. Yes, it is. When you are acquiring new technology, it's an asset that you are acquiring, which is going to generate more and more revenue for you in the future. Number 2. So first is correct. Number 2, debt financing is considered capital expenditure, while equity financing is considered revenue expenditure. Absolutely not. Equity financing, when you are doing, it's not a revenue expenditure. Debt financing is considered as a revenue expenditure. No, you are taking loan, so it's not a expenditure. It is debt financing. You have a debt as a result of which you take loan, that is known as debt financing. You are financing your debt, so you are having a receipt. So debt financing is basically a capital receipt of the government. So this statement is incorrect. So the correct answer here is A, one only. Let's move ahead. Again, another question in 2022. Which one of the following situations best reflects indirect transfers with reference to India? Now here, option A, an Indian company investing in a foreign enterprise and paying taxes to the foreign country on the profits arising out of its investment. Option B, a foreign company investing in India. No, foreign company investing in India, let's see, in India and paying taxes to the country of its base on the profits arising out of its investment. No. C, an Indian company purchases tangible assets in a foreign country and sells such assets after their value increases and transfers the proceeds to India. No. A foreign company transfers shares and such shares derive their substantial value from assets located in India. That is the classic definition, you can say, of the indirect transfers. Right? Let's move on. The question asked in 2023, consider the following statements: demographic performance, forest and ecology, governance reform, stable government, tax and fiscal efforts for the horizontal tax devolution. That means devolving the tax among the states. For the horizontal tax devolution, the 15th Finance Commission used how many of the above as criteria other than population, area and income distance? So we have seen 14 Finance Commission was asked, 15 Finance Commission was asked. Now there is a possibility 16 Finance Commission will also get asked. So be prepared for that. So demographic performance, yes, they did take that. Forest and ecology, they did take that. Stable government, no. Governance reforms, no. Tax and fiscal efforts, yes. So 1, 2 and 5. So basically, they have not basically given you the statements which are correct. They have simply given you how many of them is what they are asking. Demographic performance, yes. Forest and ecology, yes. This and this are not. This is yes. So total 3. So the correct answer here will be B. That is only 3 will be the correct answer. Now again, another question from 2023. Consider the investments in the following assets. First, brand recognition. Second, inventory. Third, intellectual property. Fourth, mailing list of the clients. Now the question is, how many of the above are considered intangible investments? Intangible investments. Now brand recognition is intangible. Your brand gets recognized. You cannot, touch, see, feel that data, but you realize that data that is there. So 1 definitely. Then you have inventory. Inventory is not intangible, it is tangible. How many units, how many equipment, how many machines. So that is quite tangible. You can touch, see, feel and hold that. So this is gone, right? But these questions, these kind of options are tricky. You literally need to know the entire thing. Let's look at the next. Intellectual property, yes, definitely yes. So this is also gone. But now you still need to know the mailing list of the clients. The mailing list feels like there is a list. You can touch, hold, feel, see the list. But it's not the piece of paper that is important. It's the name, the mail, email IDs that is important, which is again intellectual. That is again, intangible. So the mailing list also will be intangible. The correct answer here will be C. That is only 3. This and this are all intangible. They are all intangible investments. I hope that is clear. So this is about the fiscal policy and the budget related, right, which have been there. Now we have covered almost half the chunk of questions, but again important questions based on external sector etc. are remaining. So stay tuned with Legacy IAS Academy's YouTube channel. Subscribe to it, hit that bell icon so that whenever we bring out a video or go live, you will be notified about the same. Until next time, keep studying well. Thank you.